All right, welcome back, my stock market financial investment enthusiasts. Thanks for joining me again on my new channel, Invest the Rest. Basically, what we're doing on this channel is looking at a bunch of different financial strategies that I employ with all of my extra cash. Get any extra cash, savings account, discretionary income, get it into the market, get as much money in the market as possible for as much time as possible, and figure out the strategy that works for you. So what we've gone over so far is, in my previous videos, we've gone over a $10,000 growth fund that's focused on medium to low risk index funds, $10,000 high yield dividend cash flow focused fund that is looking for monthly cash flow. And then what we're going to look at today is my third account, which is my options trading account. As always, this is not financial advice. I am not a financial advisor, and this video is for entertainment purposes only. The biggest thing that I can say is make sure you do your own research, understand the trades you're making, the products you're investing in. This is really a discussion of my financial journey, and something else might work better for you. So, options trading, this is probably the area I have the most limited experience. It's something I started within the last year, and it's definitely a more active method of trading where I have to make trades for contracts every week. The stocks that I've picked right now are shown on the screen here. We have MSTY, MSTU, SOUN, MARA, and TSLL. What you're looking for, or at least what I look for in a stock when I'm planning on trading option contracts on it, is high volatility. You want it to go up, down, make big swings, and you can make the most money on those stocks. At least that's where I found the most success. Again, staying true to my $10,000 limit in every one of my accounts to even the playing field when I compare accounts farther, into 2025. I am not going to expose myself to option contracts being, exercised more than $10,000. So I'll get into that in a couple minutes here. But the strategy that I'm going to employ for option contracts to make my $500 per month in income is I'm going to sell call and put contracts for the premium that is awarded when you sell options. I am not looking for capital gains. I am looking for that premium income deposited directly into my account when I make those contract sales. I am going to be using one of my Fidelity accounts. I know up until this point I've really stuck to Charles Schwab, but my Fidelity account has some of the securities, MSTY particularly. I already own some of that in my Fidelity account, one of my personal accounts, and I want to sell both calls and puts on MSTY. So let's jump into it here. I'm going to briefly cover what a sell put and a sell call is. So when I sell a put contract, if we follow this row all the way over, I'm basically saying in the strike column that between January 6th, when I sold this put contract, between January 6th and January 17th, sometime between those two dates or by the 17th of January, I will buy 100 shares of MSTY for $26. Okay, why 100 shares? Well, option contracts are sold by the 100. Okay, that's kind of the standard size for option contracts, and that's the size that I deal in. You can sell 2 option contracts, and that would expose you to 200 shares of MSTY, but I like to stick to single contracts at any given time during any given week, unless I see a major swing coming or I want to take additional risk. So we sold one MSTY put contract for 100 shares, and we said I will buy MSTY on 117 for $26. Okay, the current price of MSTY is $29.19. For selling that contract, the buyer that bought that contract from me paid me 0.3 30 cents, right? 0.3 30 cents per share to buy that contract, to buy the rights to make me buy 100 shares of MSTY by January 17th for $26. So I got $29.33 when I sold that contract. And the reason it's not exactly $30 is because Fidelity, Charles Schwab, all the brokerages, they take a certain amount of fees and commissions in option contract trading. Okay, so I sold that contract and I got $29.33 deposited directly into my account right when that contract sold. But I'm exposed to buying 100 shares of MSTY at $26 on 117. Like I said, the current price is $29.19. So the buyer that bought that contract isn't going to exercise that contract because they can sell it. They can sell their 100 shares of MSTY for $29.19 on the market. That contract that I sold will only get assigned to me, which means essentially, if I get a contract assigned, I have to take the action that I said I would. If by 117, MSTY drops below $26, right? If MSTY is $24 on 117 and I have to buy at $26, the person that exercises that contract that I sold that contract to is going to make more money than they would if they sold those shares on the market. So I sold that. I own 100 shares of MSTY, like I said, in my Fidelity account. So I also sold a call contract, okay? I sold a call on MSTY. Same, I opened it on 1/6. I sold it for 39 cents a share, or $38.33. I was awarded in premium, already deposited directly into my account, my investment account. And my stipulations for this contract when I sold it was I will sell 100 shares of MSTY for a strike price of $33 on 117, or anytime between 1/6 and 117. You can get some contracts assigned early if the market makes big swings. So again, I got $38.33. I own 100 shares. I already own those shares in my Fidelity account. And I said, I'm willing to sell those shares for $33 on 117. Again, the current price of MSTY is $29.19. And so I am not going to sell unless it goes $33 or higher. Again, if it goes to $35 by January 17th, I still have to sell those 100 shares to whichever buyer bought that contract from me. I have to sell those 33 shares. I have to sell those 100 shares for $33 instead of $35. So that buyer would, have the upside. However, for MSTY, because I sold a put and a call, which means I'm exposed to having to buy 100 shares and I could also have to sell 100 shares. If the price of MSTY stays between $26 and $33 between now and January 17th, I am going to keep both premium amounts, $29.33 and $38.33, and these contracts will expire worthless because it won't make sense for the buyer to exercise those contracts if MSTY doesn't, for the put, drop below $26 or for the call, rise above $33. So that's kind of very basics how the sell put and the sell call contracts work. If you were buying puts and you were buying calls, you would be on the other side of this transaction. You wouldn't be awarded a premium. In fact, if I was buying the puts and the calls, I would be paying the premium to then exercise the contract at a later date and hopefully gain some capital gains by exercising my contract in my advantage. But I'm interested in the premium, okay? This account is not focused on capital gains. That's why I'm selling contracts and not buying them. So once again, that's MSTY. That's why I'm able to sell a put and a call. For MSTU, I don't own any MSTU shares. And so I sold 2 put contracts, both for 100 shares, one for 28 cents a share, the other for 25 cents a share. And I received $27.33 in premium for the first one and $24.33 in premium for the second one. Take note that the strike price for the 2 put contracts on MSTU is $10 and $9.5 or $9.50. Okay, so the contracts are slightly different. The current price of MSTU is $10.09. So if MSTU between now and January 10th, keep in mind, you always have to look at when the contract expires. MSTU, they don't sell weekly option contracts. Option contracts are traded on a monthly basis typically. So I have to wait till 117. MSTU, and for that matter, SOUN, MARA, and TSLL all sell weekly contracts. So I bought this on 1/6 and it expires on 1/10. Both of them expire on January 10th. So again, if MSTU drops below $10 by January 10th, I still have to buy at 10. And if it continues to drop below $9.50, I still have to buy at $9.50. Now, the strategy of this account, if the MSTU contracts right here, lines 8 and 9, do get assigned, and I am forced to buy 200 shares of MSTU at $10 and $9.50, the next week I will sell, because I'll own those shares, I'll own 200 shares, I'll sell 2 call contracts, like I did for MSTY, for MSTU, right? So even though we have to buy them, we'll then turn those shares around and sell a call contract and hopefully retain that premium. If they get awarded, that's fine. We'll go back and forth between put and call contracts, selling, buying, of these shares, all through selling put and call contracts. And that'll make more sense. I'm going to differentiate the weeks on this table. We'll go week by week, what happened the previous week, what our plan is for the next week, and I'll go through that. It's a little bit difficult to explain it all during the first week or the first month as far as MSTY is concerned. I'm going to put the result in this column here. Did it get assigned? Did it expire worthless? What happened? What premium we retained if we have to buy a contract back from the buyer early. But as it stands right now, week 1, we have $119.32 in premium that we've collected. And hopefully MSTY stays between $26 and $33 and MSTU stays above $10. And all of this premium will be retained and we will not be obligated to buy any of the shares. You can see right here the current price. MSTU has dropped a little bit since Monday when I sold this contract, and it's very close to that $10 limit. But we had a very down, very bear market overall today, so I'm hoping tomorrow and Friday MSTU will go up a little bit. Thursday the stock market is closed this week. So what's this number up here? $7,850. That is my current exposure. If every single one of these contracts was exercised and I had to buy or sell, actually, you know what? I should take out the call because that is that's irrelevant. I'd be selling shares that I already own. So if we make that 0, my current exposure for my put contracts of shares I might have to buy, I might have to buy all 100 of MSTY and 200 shares of MSTU. That would cost me $4,550. And the reason I'm keeping track of that exposure is because I don't want to go above $10,000. Like I said, on any given week or any contracts I have out there, any given month, I don't want to go above $10,000. So I will modify the formula to only count put contracts, because if a call contract is initiated, we will receive that money. I'll receive $33 per share of MSTY, and that'll be deposited into my account. So that's not really exposure of having needing to put more money out there, if you will. So I'll modify that equation for my next video, and like I said, this will make quite a bit more sense on week 2 when we can see what we need to do based on what happened here in week 1. That's how I'm going to track it. We have our monthly totals down here. And then real quick, this is a screenshot from Charles Schwab. I know I said I'm trading in Fidelity, but this is MSTY. And what I wanted to go over very quickly is how option contracts are displayed. How do you trade option contracts, right? So here you have your calls and your puts. And again, this is for MSTY. And what you'll see is your strike price, okay? This blue column here correlates to this column up here. And if we look at MSTY, I picked a strike of 26 and 33, one for a put and one for a call. So $33 was the call. So if you come down here, you see 33 is the strike. And to sell a call right now, granted, remember, I sold this on Monday, so I got a little bit more premium for it. You sell one option contract at $33 for MSTY that expires on January 17th. You always want to look at this date as well. This is your expiration date. You would get $10. In the same, if you sold MSTY one put contract at a strike at $26, you would receive $25 in option contract premium. Okay, both of those would expire on January 17th. So you want to pick your strike price based on the risk you want to take, and this is how much premium you would receive. So for instance, at a strike price of $29, if I sold a put contract that expires on January 17th, I would receive $185 in premium payment to sell that contract. But if MSTY drops below $29, that contract gets exercised and I have to sell my 100 shares. And it's currently only at $29.60. So some might say there's a higher possibility that MSTY is going to drop below $29. And that's not really the goal of this account. I'm selling farther away from the current price. My strike price is 26. The current price of MSTY is 29.6. And I'm selling farther away from the current price of the share because I don't want it exercised, right? I don't want it exercised. I just want to slowly harvest this premium on the call and the put side. And hopefully it's not exercised. If it is exercised, the following week we'll flip our strategy and hopefully we will sell those shares and then we'll continue on, okay? So that's how you read an options chart, okay? You pick your strike price, you look at your expiration date, and you kind of pick where you want to be, where you think the share or the stock will be by your expiration date. So take a look at that if you're interested. I would highly recommend doing your own reading, doing your own research, familiarizing yourself with option contracts. Start out small if you do get into it. Okay. Last thing I'll go over, this account, SOUNMARA-TSLL. They've been very volatile lately, extremely volatile, and I don't have a lot of experience with these funds. So I did not trade contracts on them this week. They are on the table because it's a possibility I will get into those funds in future weeks. I kept the first week small. Again, my true exposure, $4,550. It's about half the account. And, I want to make sure I get into a good routine here. I want to get some premium earned. You know, there's 4 weeks in January, 4 full weeks, if you will. And we're at $119. So, you know, that $500 goal, we're right there. We're right there. And I think it's still achievable. So $500 a month, $10,000 option trading account. This is my strategy. We're going to see how it does in 2025. It's very active. I have to look at all these funds every week and decide what I'm going to trade based on what happened the week before. I'll continue to post video updates for this account. And as always, if you found anything in this video of value or entertainment, you found it informational, please like or subscribe below. Specifically, if you subscribe, you'll be notified of all the account updates I'm going to do. And, you know, as always, thanks for watching, everyone, and I'll catch you on the next one.